right, you're live. You good to go.
Happy Friday, VV Nation. Ryan here, giving you today's presentation on the mobile coaching app. Now, a couple things I do want to go over. Obviously, we had the Fed earlier this morning. Oh, can everyone hear me? Because I know last Friday we had some technical issues. Just want to make sure everyone can hear me, can see what I'm saying. Let's see here. Move this over. There we go. All right. We'll give everyone a second to join the room here. Hope everybody's having a good Friday, ready for the weekend, ready for this roller coaster of a stock market to be done with this week. You know, the Fed did not help that volatility by any means. Hey, John, how are we doing this morning? Janice and T. Where's everybody watching from? You know, here we're located just outside of Charlotte, North Carolina. Cole, good morning. Everybody, welcome. We're going to get started here in just a second. Let everyone kind of roll into the room here. South Louisiana, in the middle of 11 acres of woods. Nice. I have been to Baton Rouge, lovely part of the country. I definitely like New Orleans quite a bit. The culture there, the music, the food. Definitely recommend going if you've never been. Calgary, been there before as well. Even made it up to Banff area. Was it Lake Louise? One of the most beautiful places I have ever been. So if you get the chance, fly out to Calgary and visit Banff. LA, another good spot. Haven't been out there in a while. Need to check it out again. Last time I went out there was when the Rams had just moved to LA and they played the Charlotte Panthers. So went out there for the game. All right, we've got Georgia and Boston also in the house. John DEW kept subscribers out of trouble. You know, that is the power of the market timing signals. You know, ignore them at your own risk. Now, obviously, if you're a more passive investor, the primary wave, it's kind of an early warning sign, but may not, be something you necessarily need to, watch all the time, especially if you're more passive. But, that DEW and confirm down, don't want to ignore that. The DEW personally is my favorite signal just because I'm a swing trader. So, its basis off of technical analysis kind of aligns with my goals and objectives. Let's see here. All right, so people are starting to come into the room now. So we'll go ahead and get started. We've got the mobile app here right in front of us. Up at the top, you see the major indices trying to claw back some gains. Let's see, Ryan, can you get Glenn to do a seminar in New Hampshire in the middle of February? I could definitely reach out to Ray Clark. I believe he's the one that orchestrates and organizes these events, and let him know that there's some interest in the Boston area. Greg, good to see you today. Again, it's Friday. We've had quite the week. As you can see by the title of today's stream, Fed Talk, Acquisitions, and More. First, we'll get to the Fed here. Let me hear it in the comments. What do you think about the Fed, taking another pause even after an uptick in the CPI data in August? Am I surprised by that? No. I think they've always been on that track of, one rate hike towards the end of this year. Wouldn't be surprised if it was November. Obviously he likes the phrase data driven. So if we can get inflation lower by then, we may not even have that additional rate hike. Otherwise, if we see another uptick, won't be surprised. John, Ryan, I am kidding. Glenn won't come to New England in the winter. I don't blame him. I don't come to New England in the winter. Maybe in the summertime, we could see about, putting on a show up there. We were just in Canada, not too far from you. We were in Toronto for a 2-day. This week it's LA this week. So yeah. The team is out in LA giving a good presentation. Now, back to the Fed. Right out the gate, we did a live stream on it right at 2 p.m. when the data came out. The markets dropped quite a bit. All the major indices, the VectorVest Composite included. Now, a couple minutes later, by 2:15, they're trying to, call back some of those losses and make up for that. Now, by 2:30, though, once, JJ, Jerome Powell, Jerome, whatever you want to call him, I know Glenn likes to call him personally on the telephone. Once he started talking, though, the markets did not like that, especially towards the end of his speech. He was pretty transparent that, they still have a goal to meet, and they haven't quite reached that goal. The belief that, they're going to lower interest rates anytime soon and that this is the end. He pretty much said no. As long as the data keeps as it is and inflation is persistent, there's not going to be any, rate drops in the near future, but that's to be expected. So I don't know what the market, was so shaken up about. He didn't really say anything out of the ordinary. I guess there was a lot of optimism as far as, not doing another rate hike, but, as we've been talking about on this channel, we're not going to be surprised to see another one. I'd like to see a 0.5 point. Probably definitely not going to see that, unless there's a major uptick in inflation again. But I think a 1/4 point is reasonable at this point. Let's see here. Doesn't sound like rates are going lower till 2025. Won't be surprised by that. By all means. Jim, see here, JM, what happened with oil? I'll have to take a look at oil. Let me pull up oil, actually, because that's definitely something I want to talk about. I like to be, if you're in the market right now, oil is definitely the place to be, petroleum. And in the mobile app here in a minute, I'm going to get to the top industries, and I'll show you a common theme here. So let me just type up oil price, see what oil's doing today. Let's see here. Oil prices today. The Brent is at 93.57, so we're still above that $90 a barrel level. It got close to 95. I think it was like in the 94s. Started to retrace there, but like all things, it moves up a little bit. It's got to take a breather and go back up, But as if you've watched my videos, not the shorts, but the actual the 6 p.m. videos, the last one I did on oil, OPEC announced, it's cut until. Oh.
But we don't realize.
Oh, I think I lost my editor here for a second. All right, now we're back in business. But yeah, as far as oil, it hit $95. Speaking of the Brent, started to retrace. It's up again today. So, oil is subject to volatility just like the rest of the market when Fed Chair Powell speaks. Now, see here, Jim, check out the energy bullish percent index on stock charts. I really don't want to be holding energy stocks at this level. A lot of them are overbought, taking profits. Again, you can tiptoe in and tiptoe out and buy back in, so, if you've been holding these positions for a couple months now, we're going to talk a lot about energy today because it's, I think 4 out of the top 5 hot industries right now are dealing with energy. So we're going to take a look at those. Now, Aroma just said Tesla. I haven't even looked at Tesla today, but I imagine it's probably, I see the NASDAQ up today, so I'd imagine it was probably also up today after yesterday's sell-off. Now, let's scroll through the major indices here. We got the Dow Jones up, NASDAQ is up, SPX is up, and the VectorVest Composite. They're all up today, so let's just click on the VectorVest Composite, see what it's doing. You see the gap down yesterday. Let's zoom into a 1 month. We broke that level of support there, that black line going through. Now, yesterday we did gap down. It got a lot of follow through. Sometimes when you get a gap down, you don't get much follow through. But we could see the candlestick there. Bears clearly had, took charge. The low, or the market's closed right at the low there. Even if we look at the relative timing, dipping quite a bit. A little bit on an update today with the gap up. However, we're already starting to see the selling pressure coming in with the top wick forming. So let's just click on the 1 day here. All right, so we're actually almost back to where we opened up at the VectorVest Composite. You can see the high hit 56.80. Now we're trailing down to just below 56.70 with the VectorVest Composite. So let's take a look at our market timing signals here. Right now, the market is neutral. VectorVest does not advocate buying any stocks at this time. So if we're not advocating buying, then typically that's usually the time to protect profits, right? And if you're going to open up positions, I will show you what industries are hot right now, but now is not necessarily, the time to do so. Now, if we look at the market timing signals for more conservative investors, more passive investors, we have the confirmed call here, which is down. We click on this. We see the last down arrow came in right here on the 9th of August. So, that definitely saved a lot of customers' headache there. That's why you never ignore the confirmed down call. It tracks the big movements of the market. And next we're going to go into DEW. That's my favorite. Let's see here. That went down on the 11th of August, and since then the market has retraced quite a bit. It was around, this is the VectorVest Composite. Again, if you're new to the channel, the VectorVest Composite, or VVC, is how we track the broad market. It's like combining the NASDAQ, the Dow Jones, the S&P, the Russell, the Pink Sheets, all the stocks. We're tracking over 9,000 stocks, and that is a composite tracking those stocks. And we just feel it better represents the broad market as a whole. So you can see since the DEW signal was given down, it was around $59.50. Now we're trading just at $56.70. So quite a bit of retracement there. So this is the power of having these signals on your side. Now we got the green light buyer here. That is neutral. And we have the primary wave is down. Now last Friday when I did this live stream, let's see here. There we go. On September 15th, that's when the primary wave was going down. Actually, during this broadcast, it was starting to teeter. But we just had to wait till the end of the day to close with that primary wave down signal to get confirmation. Now, since then, the market, again, has been retracing quite a bit. The market not liking what Fed Chair Powell had to say. Now, what do you think? App stock, BSR hit 0.15. MTI's at 0.61. Bill, so I take it you're hinting at the bottom fishing strategies with the BSR and MTI at these levels? Correct. So, and Jerry D'Ambrosio is actually doing a video tonight. The special presentation is on, is it time to bottom fish, right? Well, in my opinion, we're getting close, right? The levels down huge money on app stock options. We'll have to take a look at app and see exactly what's going on with that one. It's not a company I track regularly, so I'd have to take a look at it. So, when we get to that part, let me know what kind of stock options you have. I trade options. So, with options, you can repair at least, if you have expiration out far enough. Now, if your expiration is not that far, it's going to be very hard, to fix that because of the time decay. So, at some point, Patel, when you get into position, and I talk about this a lot, you always want to have an exit plan in place. And that exit plan is not only on the downside, but also on the upside. If you're in a position, whether it's a stock or option, when it goes up, what point do you start taking profits, right? At what point are you out of the position? And just to the downside, what is your threshold of pain, right? We see the app is at 45 strike, October 20th expiration. So we'll have to take a look at that, when we get to the stock picks. But let's scroll down here. We got the color guard, all red lights here, a couple yellow lights. So again, the market is bearish right now. So if you're holding anything bullish, most likely you're either losing money, you're already taking losses, or you're losing profits, right? So, again, what pick for put option? If you're doing put options, you know, you probably do one of the major indices. You know, I personally like the Qs, especially since there are a lot of growth stocks in the Qs, and they're very interest rate sensitive. And that was for Doug. So we got the color guard here. Again, the MTI is at that 0.62 level. So yeah, the market's greatly oversold right now, right? So is now the best time to be opening up put options or playing bearish positions? No. And the reason why I say that is we got a yellow light the past 2 days in the color guard. So we're seeing some of that downward momentum sell off. I'm not going to say that the market can't continue to go down, but as of right this second, I don't see the, you know, opening up new bearish positions, right? We already got the MTI and BSR so low. Now, if you guys aren't familiar with those indicators, the MTI typically gets top heavy around 1.5, 1.6, right? So usually that's a good time to, you know, protect profits and start tiptoeing in bearish positions, right? Obviously, you want some confirmation with that, with like a primary wave down or a red light, something showing that the market is starting to roll over. Just because MTI gets up to 1.5, 1.6 doesn't mean that it can't continue to rise, right? So you want to see confirmation on our market timing signals, just like to the downside, right? If you're trying to bottom fish, everyone likes to bottom fish, get stocks, you know, on a discount. But if you buy just, you know, blindly right now some stocks, what's saying that the market can't go down further, right? So normally you want to see, you know, a green light in the price column. You want to see a major move in the indices themselves, and we're just not there right now. So, you know, now is a good time, you know, maybe get your shopping list ready, you know, get a watch list ready for that opportunity to come. You know, it could come as early as next week or the following, but as of right now, we're just not seeing that at this moment. You know, we're starting to see the market level off a little bit compared to yesterday. We see the yellow lights given, but otherwise the momentum is still to the downside, right? And we don't want to catch that falling knife. So where I'm going to put you right now in the next category, we're going to go to stock pick ideas. We're going to go to hot industries, right? Because if you insist on being somewhere, these are the industries that are actually doing the best right now. So as the market pulls back, these industries have been on the rise. They got momentum behind them to the upside, right? You can see here, as I mentioned earlier, 4 out of the 5 are energy related. We've got food, dairy products. That's number 1, right? The other 4 are all energy. And if you've seen my videos I've put out lately, I've been touting energy, right? I've touted coal, petroleum, and uranium. Look at the high industry list. Now, coal and uranium is in the top 5. They weren't there when I did that video. I think, well, I did energy and uranium, was it last week or the week before? And I've been touting petroleum since July, mid-July. I think I did the first video on that. The energy stocks going down too. Well, you know, let's take a look at these. Let's scroll. You think they will go up now? Let's see here. Let's click on energy. Here's coal, right? HNRG, CEIX. Even the video I did earlier this week, I did best penny stocks in the energy space. I had petroleum, uranium, a coal one, and then solar. The hydrogen company. Well, sun and hydrogen. So I gave you a list of 7 stocks. That was one of the 6 p.m. videos. So let's just take a look here. We got HNRG. These are all up today. And this one, what was this? Yeah, that was coal. HNRG. That's what I thought. So I don't know what you necessarily mean by going down. Let's just take a look at HNRG here. Yeah, everything looks good here. The value, it's undervalued at $19.41. If you look at the gauges here, the only thing that would be concerning is safety. So just know that you're taking a little bit more, risk in this position. But let's take a look at this graph here. Oh, that's the 1 day. Let's just go to 1 month or 3 month. Let's go to 3 month. So yeah, coal, it did take a dip in early September, but it found level support. Now I'd like to see this high taken out here. We're definitely seeing some resistance come into play around that 1260 level. We can even see it here. The prior peak. So we did break the prior swing high. However, we are finding resistance. We're seeing 3 out of the last 4 candlesticks, we have tall wicks, right? So I'd like to see, this level, 1260 broken on strong volume, showing momentum back to the upside. However, the 3 is above the 8-day exponential moving average. EPS, we can switch here. Someone mentioned EPS. Let's do EPS here. Bottom graph, earnings per share. Check that one off, and then now it should pop up. There we go. So the EPS has dropped over the last 3 months there. We do see that quite a bit. However, but the space has got a lot of momentum behind it. So yeah, if you're more of a longer term fundamental trader, that is something to be cautious of, right? Now, if you're a short term momentum technical trader, the technical's in our favor right now. If you're in this position already, you're probably riding it because the 3 is above the 8-day exponential moving average. If you're not in this position and you're a technical trader like myself, I'd like to see it break 1260. Or if it hasn't broken 1260, maybe, tiptoe in that position. And then once it breaks that level, then you can, go more into it. Again, you can tiptoe in positions. I like tiptoeing in to get a good dollar cost average, right? Now, once I have allocated, just for example, $1,000 and I'm out of, I've already allocated that $1,000 in that position, tiptoeing into it. Well, if I'm losing, I'm not allocating anymore. So that's not the dollar cost averaging I'm talking about. I'm talking about dollar cost averaging to actually open the position. Now, once you maintain the position and you're taking losses, stick to your initial stop, And if you didn't have an initial stop, we do have sell ratings. We do have a stop price. You can use the 3 and 8-day moving average. You just got to have something in place, I'm not a financial advisor. I can't tell you exactly what to do. But I will say, if you have no plan, you can find the best stocks. You can have the best market scenario out there, and you will lose if you don't have a plan. And that's either, you're up, and up. You've made so much money, but you didn't have a plan to exit those profits. So when the position, if hypothetically, if it rolls over, you can lose all those profits. Those are things we don't want to do here. So just scrolling through here, look, CEIX, nice lower left to upper right. Look at the EPS is dropping. ARLP, nice momentum play to the upside. EPS is dropping. So it looks like, just in general theme here, price action has momentum to the upside. Its forecasted EPS or earnings per share is, dropping on all of these positions here. You see that one's dropping as well. This is the only one, actually, NRP, that's rising in earnings per share, EPS. So just after, a couple scrolls, if I'm a fundamental trader and, thinking more long-term here, this would probably be the position I'd look at, right? And look at the consolidation over the last few days. We had nice long green full body candlesticks, breaking this level of support here. Clear break of it. At this point, I'd like to break this prior high, just show momentum to the upside. If you're in this position, 3's above the 8, again, stick to what your initial plan was. So if you want to start shaving some profits, it's, completely up to you. But right now, that momentum's still to the upside, right? All right. So if you're joining in just now, we are actually going over coal and some hot industries, see where opportunities are in the market. Tends to be mostly energy right now. So let's go back to the stock pick ideas. So we did coal, so now we're going to go to petroleum, and we're just going to do the integrated. So let's take a look here. We got PBRA. This is our top VST pick right now. Earnings per share dropping, you can see. The 3 months, it's kind of remained flat. Actually, it finally, as of today, just crossed higher than it did 3 months ago. You see some consolidation there for quite a while. However, over the past 2 trading weeks, a breakout to the upside. PBR here. Oh, here we got BP. Some consolidation here. So it looks like a lot of these oil stocks. Well, this one still has momentum, at least over the last 4 or 5 days. Really over the last week, a lot of these oil companies, you can see price action consolidating, kind of flatlining. And a lack of better phrases, a lot of times companies do this just to refuel, right? They can't just go up, and up all the time. Oh yeah, Mr. Patel, we do do it towards the end of the session. I'll create a watch list and we'll kind of dive into stocks here. But yeah, so we're seeing, good momentum here. Very similar theme to coal, though. If you look at the bottom, the earnings per share has been dropping. So from a fundamental or longer term aspect here, again, our EPS is forecasted earnings per share 12 months out, right? So if you are, more fundamental trader, you're looking at more of a valuation aspect. Yeah, EPS is a great thing to look at. Now, if you're a technical trader, I'm not going to ignore it, but it's not going to be my deciding factor. I'm playing price momentum, right? So I'm looking at things like moving averages, support resistance, indicators like RT, making sure that magnitude is still to the upside or downside, depending how you're playing the position. But with these right now, these are all bullish. So we'll go to stock pick ideas. So that was coal. We just did oil. And now we're going to jump over to uranium. And again, I did these videos weeks ago. I did another video this week, best penny stocks for the energy space. So if you haven't checked out those videos, definitely recommend doing it. I'm not going to talk about it too much, right now and take time from your stocks here in a little bit. But definitely when you get a chance, and I pulled up some really interesting news articles on a lot of these spaces, like with coal. Europe actually utilized more coal in 2022 than it did before. So they had an uptick in coal demand, right? Uranium. There's the, was it the coup going on in Niger? Well, France, the former colonial power of Niger, they import a lot of their uranium from them, right? So that's putting a lot of, there's a lot of things going on in the world putting constraints on supply. And when it comes to petroleum, OPEC, Russia and Saudi Arabia have been leading the OPEC oil cuts. And I just saw an article out this morning. I didn't look too much into it. So it was from oilprice.com, which, they're typically pretty reliable on their information. But it looks like Russia just stopped exporting diesel, put a ban on exports of diesel. So that way they can supply their domestic needs for it. So I imagine that's only going to put pressure on oil as well, going to the upside. I like oil stocks personally. I'm in some dividend oil stocks right now, a little bit riskier. I'm not really doing it as a momentum trade because I've always done short-term trading, but I just wanted to add some dividend stocks to my portfolio, and I did mostly through oil. I did buy San Juan, and I bought BPT. That one's a little bit riskier on the dividend payout, but I bought it on the dip when it announced that it didn't have a dividend payout last quarter. So I got a pretty good deal on that one. But other than that, these are great companies. If you're insisting on playing to the upside of the market, these are good spots to be in right now. We got coal, petroleum, and uranium. Now, the other thing I wanted to show you, as of right now, for the bears, because I like to be bullish and bearish. For the bears, let's see here. We go to, screener, featured screens. And then we have ETFs bearish. So let me click on that. All right. So right at the top of the list, looks like we got biotech 3 times. So biotech looks like it's taking a hit right now. And I like looking at these ETF screeners because it just tells me what's working and what's not working in the market right now. So just from that, I can see biotech's taking a hit. The next one, SRTY, this is shorting the Russell. So the Russell is also taking a hit. You can see it gapped up today, the Russell. However, with this ETF, that gap, it looks like it's fading because that ETF is also fading itself. Coal is an environmental concern. Bill, you are right about that. So, developed countries, we're not a fan of coal. Where's the demand? Developing countries, right? Until there's some kind of cheap alternative source, coal is definitely going to be, still utilized. In those videos, was it India? They're expecting their coal consumption to go up, I think 25% by 2030 to meet energy demands. And the other thing I thought was very interesting is that the United States is actually exporting more coal at like historic high levels of export to the Asian Pacific countries. We have a huge abundance of coal. we're not utilizing a lot of at home because we're, going to renewables, nuclear, other energy sources that are much cleaner. However, we're shipping a lot of them over, a lot of our coal over to Asia to keep up with their demand. So yeah, it's definitely an environmental concern, and it's a very dirty fossil fuel. But until we find alternatives that meet the demand and the price point is right, coal is still going to be a huge player in the space. I don't have the figures on me, but I believe it was like 35% of the world's energy is from coal. It's in the video. You'd have to look at it and see, but it astonished me. It's quite a bit of coal there. But yeah, going back to these ETFs here, we got small cap bearish. That is on the rise. We got KOLD, which is shorting natural gas. That's cold. SOXS, that's shorting semis. Now, thought I had to sneeze for a second. Now, SOXS, semiconductors, a lot of them are on the NASDAQ, NVIDIA, AMD, UMC, those type of companies. So these are, again, very interest rate sensitive, right? So when you see the, Federal Reserve saying, hey, we're not done raising interest rates. Well, yesterday, semis took a hit. I saw AMD broke a key level support at it was around $100. Yesterday I saw it around $96.70, $97. So a lot of these, semis, they're under a lot of pressure right now. So if you're going to be bearish on the market, these ETFs is a great way to start. Again, before you start opening up bearish positions, at least wait till we got a red light. Right now, yesterday and today, we've got yellow lights and the price action of the color guard. So the market, it's kind of undecided right now, right? So it might be too early to jump in when it comes to being bearish. And it's too early to start bottom fishing. Don't forget, cash is a position. If you're out there just trying to find something to buy every day or sell or short or whatever it may be, you're pushing trades that probably shouldn't be taken. You're looking for opportunities that may not have been taken. See, France is nearly 75% nuclear electricity. Yeah, that was one of the things that I found out in my research, Rick. They are heavily dependent on uranium, and most of their uranium comes from Niger. And from the coup, I don't know too much about the politics, but the new political power has pretty much halted uranium shipments to France, at least last I saw a couple weeks ago when I did the video. Things could have been updated. And one of the big things I learned about uranium is that Kazakhstan, they are like half the world's supply of uranium. So if you ever hear of news, geopolitical issues in Kazakhstan, betting on uranium during that time period may not be a bad play because they are a huge supplier, and I was surprised by that. See, LABD doing very, very well. Yes, it is. It's up again another 2% today. So let's get to the stock picks. Let's see what kind of stocks you guys are interested in. Give me just a moment here. Let's create a watch list here. Let's see, my watch list. All right, so the time that you guys all been waiting for, go ahead and type in those symbols. See, I believe that was app, so let me just go ahead and put that one in here. App. TSLY. We got Tesla. Tesla, I'm actually liking the Tesla pick. And I'm going to get that into just a second while I push all these in here. See your app. I think I did add app already. There we go. Yep. See your W. So you are shorting Wayfair. Not necessarily a bad call there. I'd have to look at the chart. ORN. Let's see here. Oh, Orion Group now. Let's see here. Apple. We got NVIDIA. MTRX. Give me a couple more here. We'll stop here and just say RELX. Trying to get everyone's picks here. ACLS. WBD. Disney. Disney, they've got a lot of issues. I'm not that big of a fan of Disney. So we got what? 13 stocks here. Let's do what can you get for TKO. Is it TKO in yet? Oh, it is. TKO Group. It is in. So let's do that. Yeah, the merger between WWE and UFS. You got Pfizer. PFIE, Profire Energy. All right, this will be the last one. WFRD. I think that's Waterford, right? Or Weatherford, yep. Which is an oil company, if I'm not mistaken. I see so many different stocks here. Create watch list. We'll delete this. We'll do, see here, it's 9:22. There we go. Bill, highly capitalized firms are not as sensitive to interest rates. Correct. The highly capitalized, the Apples, the Nvidias, they are not. But a lot of tech companies are, such as like the, the AMDs, the SoFis. A lot of the smaller companies definitely are. Let's see here. Is Glenn jealous that Ryan doesn't have to put anyone in timeout? Yeah, I don't have to put anyone in timeout. Everyone's been nice. Y'all get the like buttons hit so Ryan doesn't catch flack from Glenn. Yeah, please hit the like button here. Try to show you something in the market. Today's general theme was the Federal Reserve creating a lot of volatility. The market, the movers right now is energy. That's the move. We saw, looking at the ETFs, biotech, they're taking the biggest hit right now. That ETF was at the top of the list, the bearish ETF on biotech. All right, so we've got, I think, like 15 stocks here. We've got quite a few stocks, so we're going to just start scrolling through them. Just looking at the VST right now, that's the overall value, safety, and timing. We've got Profire Energy, Helix Energy, Orion Group, Matrix Services, and then Weatherford. So no surprise, the top two are in energy. Remember, I'm telling you, energy is the key right now. That's the place to be. It doesn't seem like it's changing anytime soon. I let the market come to me. I don't try to predict the market, right? At least as far as petroleum, I'm bullish, mostly up until the end of this year, just because of OPEC said that they are going to continue cutting supplies. But, unless something changes, something, U.S. vamping up supplies, or something along those lines to put more balance in the supply demand side of things, I'm gonna be bullish. There's nothing telling me elsewise right now. So let's get into these. We got Profire Energy. All right, let's go right to the chart here. We're just gonna go into the charts. We got the 3 and 8 day, and we've got the EPS, exponential moving average. And we've got some resistance, support and resistance lines up. So here's the past 3 months. We've got a lot of momentum to the upside. Definitely broke its trend line. Just comparing those swing lows, definitely broke its trend line as of a few days ago. And the 3 is below the 8 right now. So as of at least 2 days ago, when that 3 crossed below the 8, probably trimming, protecting profits in this position. However, we see a nice bullish day today. Went right back up to the 8-day exponential moving average. Just seeing a level of resistance there. I'd like to see at least another up day, if I'm going to get into this position, because right now we're just seeing some volatility. We're pretty much where we were 4 or 5 days ago. If you're in this position, depending on when you bought it, if you bought it at $1.20 or even up to $1.50, you would have doubled your money, right? And it's close to $3 or over $3. Got up to $3.20, it looks like. At some point you gotta take profits, right? You know, it doesn't mean you got to trim all the profits. It doesn't mean you can't buy back in, right? But as of right now, I'm not buying this position just because the 3's below the 8. It broke its trend line. I'd like to see a prior swing high. You know, right now it's just above 280. You know, even getting a close without, you know, some selling pressure, without an upper wick up around that 320 level, that resistance, that would be nice for confirmation. I know you're giving up about 40 cents there, but I'd rather give up that 40 cents for confirmation than just guessing where this thing might go. Now, as far as, you know, a bearish stance, you know, really 260, you know, what's the low here? Yeah, 259. If it breaks much more below 260, how far can it go, right? You know, I definitely see 240 in the picture if it breaks 260. So if you're just trying to, you know, protect profits, again, that's why I would look out on the downside. Now, the earnings per share EPS is rising, right? So from a long-term fundamental aspect, you know, if this is a long-term position, still looks good. But if you're trading this, you know, more actively, you know, right now it's bearish right now. So if you're not protecting profits from the most recent rally, you know, essentially, yeah, if you're not protecting profits, you know, now is definitely a good time to do so, right? You know, especially if it breaks that 260 level. Let's scroll to the next one. We got HLX, Helix. Nice price action from lower left to upper right. 3 is above the 8. And look at EPS on the rise. This looks like a very, very beautiful chart. If you're already in it, 3's above the 8. You know, why rush to sell it? Again, always stick to your initial plan, though. If you're not in this, I just want to see it break that prior swing high. Just, you know, get a newer high and confirm that the uptrend is continuing. Now, next we got Orion. We've got a nice strong buy rating on this for quite some time. 3's been above the 8 since it looks like about August 21st, 22nd. So that momentum continues to go to the upside. And the earnings per share is continuing to rise. This looks like a great position here. You know, just remember the stock, the market is down. So you're taking more risk if you're just going to go in and jump in positions. You know, I like to see some green lights in the color guard, something. You know, and the reason why I say this, when I first started working at VectorVest, it makes sense. Because if the market typically moves around 80% of the stocks in the database with it, right? You want to be on the right side of the market, you know, because, you know, yeah, you might buy a stock, but you only got about 20% chance of it going against the market, right? And the market right now has been trending down the last 2 days, a little undecided. We're seeing those yellow lights appear. So, again, you know, let the market come to you. If you're in this position already, you know, no rush to necessarily sell it at this moment. The 3 is above the 8. Earnings per share is still rising. And we got the buy rating. Now we got MTRX here. You know, again, we had a little channel there. We see the support and resistance lines. Well, I guess they're both support lines now. But you can see the channel, you know, from right here to about here. Finally broke out. Look at that breakout. Strong breakout there with that candlestick. Retested that candlestick right around here. Oh, and we see the gap up, and it's still on the rise. And it looks like it's heading towards $10. We got the buy rating on here, so this looks like a great stock too. 3 is above the 8, so momentum is still in a bullish manner. Here we got Weatherford in the list. So the 3 just crossed below the 8. We've had a nice strong buy rating on this for quite some time. You can see the resistance is clearly $100, probably like $99 on the chart there. That's so for a bullish stance, I'd want to, you know, break that prior swing high. You know, $99. I'd like to see price action get above that. Right now in the bearish stance, 3 is below the 8. You know, I could see it. You know, it's definitely, if it continues to trend down, I wouldn't be surprised if it hit this level here around 87. You could, you know, it could find a level support from a prior swing high, hopefully. But yeah, so there's still more downside potential there. But right now the 3 is below the 8. So, you know, if you're in this, protect profits. If you're not in it, not necessarily the time to buy. You potentially could get a, you know, better deal coming up here soon. Now, earnings per share is on the rise here over the last 3 months. Nice steady step fashion from lower left to upper right. I love a company that's continuing to grow its earnings. Here we've got NVIDIA. NVIDIA is having some trouble as of late. I haven't really looked at it in the past few weeks. But we see that NVIDIA is at 419. I'm going to zoom out here to 6-month graph. If we look at the support level here, we're right in this zone. Oh, my fingers are a little big for the screen. We're right in the zone right here. The next zone you can see is right at 400. 400, me personally, I'm going to say is a key level, because either price action touches that and we get a strong buying pressure, which would create a triple bottom, which might work out pretty well. However, if we break that 400 level support, look what's right below it. A huge gap to fill, right? And if you're ignoring that gap, then you could be in for some trouble. So honestly, NVIDIA might not be a bad short position. If I can get confirmation of breaking below that $400. But as of right now, the 3 is below the 8, has been quite some time. The 3 crossed below the 8 back when the stock was around $480. Now it's at $419. So yeah, there's not much bullish here with this position. NVIDIA's had a great run. We have it being overvalued. Last time I looked at it, I think our value is close to $300. I have to take a look and see. But yeah, A-Hype is pretty overvalued. The stock has had a lot of momentum this year, but it's under pressure right now. So if you're in it, protect profits. 3 is below the 8. We are in a support zone right now, but if we break it, we can get down to 400. And if we break that 400, that's the key level. That's going to bring in a new low. And in addition, there is a gap to be filled just below that. Now that gap, that open was 385. So yeah, much below 400. Price action is going to be tempted to fill that gap. So that's my biggest concern with NVIDIA right now. We see ACLS. We've got a sell rating here on this position. Just broke this level of support here. Ooh. We see a clear break on that level of support. 3 is below the 8. As far as any, support, I do see some consolidation here. So around 144, price action could potentially go down to if the bears continue to take charge. We just got the sell rating on it today, actually. You see a little red dot in the top right corner? So we do have a sell rating on this position. So not bullish on this position right now at all. Now, from a fundamental standpoint, and looking at its earnings, it does have nice earnings. I will say that. It's growing its earnings quite a bit here. You see around $5.60 as of 6 months ago, now just above $7 a share. All right, next we've got RELX at the top of the list, or at the list here. We do got a buy rating on this. Let's zoom in a 3-month time span, see what's going on here. The 3 is converged to the 8. So the opportunity to get in when the 3 and 8 was back here when it was $32. Getting it closer up to $35, about $3 profit, about 10%. In less than a month, that's not bad in a position at all. But as of right now, retracement has followed the past 3 days. We do see some buying pressure coming in today with this open red candlestick, which means that the close as of right now, market's not over, is higher than the open. So we're seeing the buyers pour into this position. But that 3 has converged to the 8, so I'm a little weary about that. I'd like to see a little bit more confirmation to the upside before getting into this position. Now, if the 3 closes below the 8 within the next day or two, and you're in this position, protect profits. Especially depending on where you bought it at. Let's scroll down. We got Tesla. Here's Tesla. Look, Tesla's doing a whole lot of nothing over the last 3 months here. It's actually exactly where it was 3 months ago. If we look here, there's the first day on June 23rd. The open was 259. Right now it's 253. Well, the close was 256. So right now we're actually lower than that candlestick just by a couple bucks. So Tesla hasn't been doing much. But this is why I like Tesla. I mentioned it before, right? We've all heard about the UAW strikes. I did a short on it yesterday, I believe it was. So that's affecting Ford, GM, and Stellantis. They're supposed to have a deal today, Matt, right? Well, I'm doing the live streams. I don't know exactly what happened to the deal. But I'm pretty sure they didn't come to a deal. Was kind of the news I was hearing this morning. In addition, the strikes are planned to spread to more facilities. I think it was like over 30 facilities of manufacturing. So, they've got huge labor problems. And this could be a time for Tesla to capitalize on this, And, not even just Tesla, some of the other car makers. You've got 3 of the big players out of the picture right now, Ford, GM, and Stellantis. That they have a lot of issues going on. So keep an eye on that. You see Tesla, retracing over the past week. The 3 is below the 8-day exponential moving average. So therefore, by those measurements, a bearish trend has started. It's lost its buy rating. It's got a hold rating right now. And look at the earnings per share. It's falling. So nothing bullish on Tesla right now. You see the 3 is below the 8. Now, again, depending on what kind of trader are you, if you bought Tesla 10 years ago or even 4 years ago, you're probably not necessarily in a rush to sell it, just based off of a little price action over the last week, right? But if you're trading this actively, the trend right now is down. And the support level, let's see here, the support level comes in, if my finger will click on it, there we go, right at 240. The top of that zone looks like around probably 246. So we're getting close. So I'd like to see some buying pressure at that support zone. And if the market can, I heard Ford did okay with deal. Asa, that might be the case. I pull it up here on the news here in just a minute. Let's see here. Let's take a look and see what UAW is doing, because that's going to affect a lot of the auto. This is the first article comes up. It says UAW strike expands to 38 more facilities at GM and Stellantis. So it looks like Ford may have done some damage control, but GM and Stellantis, 38 facilities. I mean, I don't have much experience in the auto industry, but when you got 38 facilities with workers on strike, I don't see that being a good thing, across the board. That's going to cause a lot of problems, especially when it comes to parts and services. If a customer has your automobile and something breaks on it and they can't get a new part, that's going to leave, a bad taste in a lot of customers, mouths or opinions, about that company. So yeah, they've got some trouble ahead of them. All right, so there's Tesla. It hasn't done much in the last 6 months. It's currently in a bearish trend right now with a 3 below the 8. It lost its buy rating and the earnings per share is falling. So if you go out and buy it, you pretty much just ignored everything I said, and you ignored the color guard. So you may get lucky, but statistically speaking, it's in a downtrend right now, and I'm looking more towards 245, 250. Save a couple bucks if you're going to get into this position. Now we got Apple here. Apple over the last 6 months, you see the buy rating was lost back in early August. It's been a hold just about ever since. Now you notice here on Apple, I think I talked about this in a video. Apple was setting up a perfect fill the gap scenario here, which you can see filled the gap based off of this candlestick here. And then once it filled that gap, it was done. The sellers came in clearly the next day. And now we're seeing some consolidation here. But Apple, has been under a lot of pressure with, Chinese policies, banning their phone. A lot of these tech companies, they are getting caught in the middle between a trade war between the United States and China. Now, I'm not going to go into politics because this, I'm at work at VectorVest, and I'm sure like you guys, we don't talk politics at work. So I'll let the politicking to you guys in the chat box. But essentially, this trade war is going to hurt both parties, when it comes to especially tech. The big concern, has been the semiconductors. But, we design the semiconductors. Taiwan manufactures, or we design the chips. Companies like NVIDIA, AMD, Taiwan, TSMC, they pretty much manufacture it all. They're the big manufacturer. That's why we're trying to get their plants over here, because they're so good at it. But the problem with that scenario is a lot of those rare earth minerals China has a monopoly on. So we'll see, But yeah, if we look here, this price action downward triangle forming seems to break down. Like a descending wedge. I can't draw lines on here, but I get what you're saying though. You can see the bottom of that descending triangle, you know, probably around one. Let's see, we'll just say this support level here. That's around 175. And yeah, and you see hitting lower highs each time, right? So this could be a bearish position if it breaks the bottom of that descending triangle. Now, that's around, what is it? Around the 175 level. So I'd like to see confirmation, you know, clearly on that break. However, if I'm going to be bullish on this, I'd wanted to see it at least above 180. You know, that's where the prior two tops are. This prior swing high and this prior swing high here. You know, I'd like to see above 80 on strong volume. You know, even some confirmation on like 182 would be really nice. That would bring the 3 above the 8-day exponential moving average. But right now it's below, so we're going to be bearish just based off that trend. And with yellow lights, you know, again, it's kind of a waiting game. Let the trade come to you. If you are rushing this trade and you plan on jumping in, you know, my stop is going to be around 175 on the bullish side, and on the bearish side, it'd probably be around 178 if I was going to open up today. I like to do a tight stop in the beginning to make sure my trade is working out, especially if you're going before the trade setup, right? Because if you're buying on the trade setup, you're trying to get a discount before the trade setup, right? Well, if you're trying to buy at a discount at the trade setup and that discount really wasn't a discount, well, you probably want to call it quits because you didn't have a clue what was going on, and that's why patience is key. Patience is one of the biggest things you can do during trading. Patience and discipline, right? I've watched a lot of videos on traders. A lot of them run, you know, triathlons or do things to push their discipline. I did a marathon last November, 26.2 miles. Boy, I am not a runner, and that was rough. That was a rough run. But I'm actually looking at a triathlon to do within the next year, which is a marathon. I think it's like 2 or 3 miles of swimming and like a 100-mile bike ride. So if any of you guys have ever done a triathlon or marathon, you know, shout out to you, because that takes a lot of discipline. And I like that concept, because if you can discipline yourself in your personal life, that'll probably roll over into your trading life as well. Now, here we got app. I think this was, let me scroll up the chat box. Who? Yegnish, was that you? No, who did app? Because they were talking about the options on it. Yeah, Mr. Patel, Yegnish. See here. Now we got app, so hopefully you're still in the room. Okay, yep, there you go. Yes, it's me. All right, so, you know, give me a little backstory. All right, first of all, what kind of option are you in? Are you in a call? Are you in a spread? Are you in a put? Are you the buyer? Are you the seller? Because right now it looks like price action. Let's go to 3 months here. Let's go to past month. Past month, it really hasn't done much. So you're at the 45 strike. I have October 20th expiration. Let's see here. So yeah, the 3 is above the 8. Now, I don't know when you bought this, but it looks like that 45 was coming at a level of resistance here. Oh yeah, and it's been pulling back. The 3 is below the 8-day right now. Oh, and look at this. We are getting tempted to fill this gap, sir. Let's do a 3-month here. Try to help out a fellow subscriber here. You see price action getting closer and closer to that gap. Now, if you're an active trader, right, most people look at gaps, right? Especially even the daily gaps. I like, you know, fill those gaps. If there's no confirmation on fulfillment, you can probably, I am down 65% on this option. Now, Mr. Patel, what was your stop when you first initially started this option? And I'll be honest with you, I have wrote an option down to $0, just out of principle. But I don't do that anymore. And I know a lot of people that do it, especially if you trade short-term options. You've got to put a stop on options. Yeah, need to cut bait. Mark, I'm kind of with them, you know. At what point, you know, because I know how it is. Once you're down, especially over like, now, if I am in an option trade, right, and I trade a lot of DOEs, that is the most volatile option trade out there, right? And if you ever traded DOE or weekly options, you know what I'm talking about. You got to put a line in the sand. You know, my line in the sand is usually around 15-20%. But I have that risk tolerance, right? Yeah, one day it dropped 11% in a day. Didn't expect it. Yeah, with that 3 below the 8, sir, you know, like Mark said, you shouldn't lose more than 50%. Yeah, you know, with options, you do have to have a wider threshold of pain with options, you know, as most option traders know, especially if you're just holding a call or a put. You know, if you did a spread or something to reduce volatility, yeah. Or if you were the seller of that call, do you think it will go up in 2 weeks? I'm just going to click on this company here. What does app even do? App stock. Aploven Corp. Let's see here. Yeah, it's down 0.5% today. So that's not good. Yeah, with that gap this close and the 3, yeah, I see it's a tech company now. Like I said, tech companies, they're under pressure with the, you know, with the potential interest rate hikes. So this is not the position to be in. And when you, I don't know how recently you opened this up, but the market's been trending down. We've had red lights in the color guard. You know, there was no reason to open up a call recently. You know, let's just go back. How many more stocks we got? We got a couple more here. Yeah, we'll get through these. But yeah, this one right now, it's bearish. You know, and like some of these other subscribers are saying, you have to cut your losses at some point, right? I have rode an option all the way down to 0 because once I get past 60%, maybe it'll come back. I don't know. But and I've done that before, especially first time. So you want to cut the losses. Again, I am not a financial advisor. You have to make that decision for yourself. But with the 3 below the 8, and we're getting close to that gap right now, you know, you got to look at the chart and see it. But yeah, a lot of the subscribers are saying cut your losses. You know, 65% is too much so now you have to double. That option has to double in price just for you to break even, essentially, right? So we're gonna move on. Wish the best of luck to you, Patel. But again, discipline is key. Having a strategy before you buy the option and paying attention to the market as a whole before you buy options is a great way to go. Even adding puts will just stop the bleeding. Yeah, you could even add some puts, you know, do some kind of spread strategy there. Fill the gap downside. Yeah, I have a feeling it's going to want to fill that gap down as well, especially with the price action where it's at right now. So I'm not very bullish on this. But you know, you could make some of that money back. You know, if you break this low here at 37.07. I don't know. Can you guys still hear me? Hard as hell. Can you guys still hear me? Because I lost my editor. Selling puts is always better than buying calls. Always, I lost too much buying call. Yeah, the seller, the odds always work in the seller's favor. And I'll be honest with you there. Just from a statistical standpoint, you're much better. All right, I'm glad everyone can hear me. We're going to move on to the next stock here. We've got TSLY. Look at this. We got a sell rating here. 3 is below the 8. EPS is flat. So this stock went from $18 all the way down to $13.50. Now, if you're in this position, depending on how long you've been in it, you're taking a hit. Quite a big hit at that. We haven't had any. Let's go to 6 months here. Oh, it's only, this company is new. It just started back in June. Robert, so the lines I have in the candlesticks is a 3 and 8 day exponential moving average. It's very popular for, you know, short-term trends, but as of right now, the 3 is below the 8. We do have a sell rating on it. There's not much more to say about this position. I don't see it, you know, doing anything well. And the data only goes back to June 28th, so there's not much candlestick data on here. You know, if I am going to enter this position, I'm looking at this level right here, which is around $15, it appears. So if price action get above that $15 where that level of resistance is, and the 3 is above the 8, I might enter that position. But this is not a position I want to just jump in right this second. May not even be that bad of a shorting candidate. You see the low here. If we break that low, then that stock could be on a further downtrend. Here we got Warner Brothers. This stock really hasn't been doing a whole lot over the last 6 months. It's actually lower than it was 6 months ago. We have the sell rating here. 3 is below the 8 right now, so momentum is to the downside. Now let's scroll over to Disney. Disney I definitely want to discuss on. Let's go to a year here. Disney's been in trouble. This thing was closer to $120 at its peak. Now it's trading just above 80. So let's zoom back into 6 months here. Yeah, it did hit a low of 80. Let's see here. The level of resistance comes into play around 85. So, I'd like to see it at least break above and get a new swing high before getting in this position. Now, I know what you're thinking. Disney, it's a huge company. I'd be buying it at a bargain right now, $80. But really, what is a bargain, right? What I mean by that, the stock can continue to go down. It's got a lot of problems. The governor of Florida has I guess, been a, lack of better words, a nemesis of this company. In addition, they're having some streaming issues on, different things that they believe in, right? And that has caused some backlash with other companies. Not going to mention the beverage company by name, but, mixing politics with business can be good, but when it's bad, it can definitely be bad. All right. Now we got TKO Group. This was the WWE and the UFC merger. Video was halted for a few seconds. Oh, okay, yeah. Looks like we had an issue there. So this is, came out $104. Now it's at $84. I don't like trading IPOs solely because I am a chart pattern person. And there's not much to on the chart here. Now, yesterday's TKO $15 drop came following an announcement saying they had signed a contract with NBC, leaving Fox. Oh, okay. So that definitely will... and I think I heard SmackDown is going to be back on USA, which will be... Got it from WWE. Now, WWE was doing really, really good there for a while. As far as with their business venture with TKO, we're... again, I'm a chart reader. There's not a whole lot of data on this chart. The one thing, other than the 3 below the 8, and we just hit a new low today, I do see a gap between 96 and $104. So you are definitely the best mobile coach on VectorVest. You explain it so well. No offense to my guy, Clint. It was awesome. I'll make sure to shout that out and let Glenn know. He's out in LA right now, probably catching a tan. Here it's kind of chilly. It looks like fall weather has approached. But yeah, with TKO Group, I'd let the dust settle. You're already in this because you own WWE Holding. So at some point, what is your threshold of pain? Right now you're down, from its high 108 down getting close to 84. You're down almost 25%, or sorry, 20%. So just again, what is your threshold of pain? And again, you can always buy back in. The market's pulling back right now, right? But as far as from a technical standpoint, there's just not a whole lot of data to work from. But I'd like to see it at least get back above $96 for jumping in it. Because once it gets back into 96, it's in the gap. A lot of times it wants to fade the gap. The price target would be 104, probably shaving some profit around then. And let the rest kind of, play itself out. See if we can, hit a new high here. But it's a new company. There's been a lot of, acquisitions and IPOs and mergers lately. Look at ARM. I did the video on ARM, came out, just above $50, jumped up to 70, which kind of was to be hinted at just by the articles. But now, last time I looked at it was back in the 50s. So, a lot of this stuff can be hype in the beginning. I like to see, let the dust settle, let the charts come to me, not me guess what's going to happen in the charts. Because if you're just guessing, You know, there's probably better ways to spend your money. Let's be honest. All right, we got W Wayfair. All right, this is the short position. I remember I'd have to see who was W, who was short in W here. Not a bad play. Look, we just got the sell rating on it. 3 is below the 8. You know, from a fundamental standpoint, long term, you know, the EPS here, that is rising. It's still negative though, but it is rising. And this week we did just hit a let's do 3 month. We just hit a new low, a new swing low. Look, this was the last swing low. We just broke that, hit a new swing low here. Now we are seeing some consolidation here. So whoever was shorting this, Ryan seems to know details on almost every stock. Glenn is the OG though. Both guys. Well, Glenn's been doing this a long time. I just started 2-3 months ago. Yeah, about 3 months ago. Let's see here. Looking at URG on a weekly chart shows a big wick and a possible reversal candle, which would be bearish. W was a pandemic superstar. Yes, it was. Wayfair, yeah, it definitely was a pandemic superstar. There are a lot of superstars coming out of the COVID pandemic. But yeah, Wayfair here, it looks like, you know, as far as shorting it, not a bad. We just got the sell rating showing that momentum is still to the downside. 3 is below the 8. We just got a new swing low here. So if you're shorting this, my stop wouldn't be much higher than where we're at now. You know, probably the top of this candlestick would be a good time to cut it off, which is around 66.08. So it gives you a couple bucks to work with. You know, about 10% stop. That's pretty reasonable stop there. But again, you know, everyone has their own risk tolerance, so just, you know, take that in consideration when you're doing your own stocks. So yeah, that was the last of these. You know, ladies, gentlemen, I have had a lot of fun today. You know, been cranking out videos all morning long. I just cranked out a short for the UAW protest. Now, I guess there's been some updates on that, so I'm glad that short will definitely. Now, one thing, when I was looking at the shorts, right, Stellantis was on the rise. Ford and GM were down. I wonder if today's news will pop Ford up and Stellantis will go down. So keep an eye on that as well. Now, again, my name is Ryan. Everyone enjoy your weekend. It is Friday. Go have some fun. Let's see here. Might start calling you Rockin' Ryan. I like that one. Hey, Mark, appreciate that. Ralph, you know, appreciate it. I think this is like my only 3rd time doing a live stream. So I'm still getting used to it. I know a lot more about, you know, stocks and options than just, you know, my public speaking. It's getting better, right? So you guys, thanks. You know, don't forget to hit the like button. That really does help me out. And, you know, if you're new to this, if this content is new to you and you found it useful, hit the bell icon. Get some alerts, you know. It's better than just having to, you know, because if you get the alerts, you're getting the information real time, right? And with the market, we all know it moves pretty quickly, so you want to be on top of it. Appreciate it, everybody. Enjoy the rest of your Friday. Out.